All right, all right. Good afternoon, everyone. It's great to see you all here. And we're going to have a fun afternoon as we go through and trade the last hour of the day. We're going to see if we can't add a little bit of coin to our bottom line so we have something to invest, right? So the idea here is that this is the lab for our day trading class at the university. I'm the teacher. I teach down there at Utah Tech University, and we come out here because I teach evening classes, night classes, and the night classes, the market's closed, so we can't actually trade in class. So we have to have a lab, and that's what this is. This is the lab where we're going to learn a little bit about day trading. Okay. All right, let's get started. Up in the upper left-hand corner, we have the S&P 500. In the upper right-hand corner, we have the Dow. This is a mini Dow. Bottom right-hand corner, we have the micro NASDAQ, so it's a small one. Bottom left-hand corner, we have the mini Russell 2000. Now, these are the indexes that we like to trade over in the futures market. Now, we are trading in the futures market, not in the stock market. The reason we like to day trade in the futures market, banner down there at the bottom so you can read it. But the reason we like to day trade down here is there's no pattern day trading rules. And you can have a small account, open up a small account and trade to your heart's content. There's all kinds of things you can trade. Now, I know we're trading the stock market indexes, but they are traded in Chicago out of the Chicago Mercantile Exchange. All right. So this is the software that connects to Chicago, not to New York. And you have to have kind of a different piece of software to do this. You can't just go use some old random piece of junk software that your broker gave you because you want to day trade in the futures market. You have to actually have day trading software that's designed to hook up to the Chicago exchanges. Now it's not as complicated as it sounds. We have the software right here. All you have to do is run over to trackandtrade.com, download the futures version of the software, and then you'll have what I have. You open up a little account with a couple of grand, away you go. It's just like opening up a savings account with your bank savings with your bank account. Bank savings account, and away you go. You're not at risk until you actually place an order. Your money just sits there and waits for you to place an order. Once you place an order, it either goes up or down. You make money or lose money, or you go down and up. You can lose money or make money. And that's the way it works, right? Pretty simple stuff. All we're doing is looking for an opportunity where the market has a tendency to rise or fall. And then we jump on board. And if we're wrong, we just get right back out. And that's really as simple as trading really has to be, but we're doing it in the futures market, okay? We're doing it in the futures market because there's no pattern day trading rules. We don't have to have $25,000 to trade with, and we can trade to our heart's content. Last bastion of true capitalism on earth today is out of the Chicago exchanges. Okay, so there you have it. Who am I? I'll just throw up another little marquee just so you can have this right here. I'm former instructor of the Chicago Mercantile Exchange and Board of Trade Education Centers, currently an instructor of finance at Utah Tech University. All right, so this is the lab, as I mentioned before. And we're going to come in here and see if there's not an opportunity for us to take a little trade. See if we can't make some money. I've got a spreadsheet here for us. I'm going to pull that up real quick. This is my UTU class spreadsheet. And I'm going to come over here to my legacy UBI portfolio. All right. So, not that one. We're going to go one more further over. We're going to go all the way over to, there we go. No, not that one. Here we go. Trade portfolio. Got so many spreadsheets. I don't know what to do with them all. You can have all these spreadsheets. I give them away for free. Just as a bonus, if you go subscribe to Pitt News Magazine. What's Pitt News Magazine? I used to just give these away for free. But then suddenly I discovered that half the people on the internet are using my spreadsheets on their YouTube channels. So I decided, well, maybe I won't give them away for free anymore. Well, it's actually still free. You just have to be a subscriber to Pitt News Magazine, which is only $19 right now. It's on sale 50% off, $19 for an entire year. An entire year of Pitt News Magazine, and you get these amazing spreadsheets with it. All right. So I think it's worth it. I've spent hundreds of hours working on these spreadsheets. And so if you don't think hundreds of hours worth of work creating all these spreadsheets is worth $19.95, don't get them. You don't have to have them. You can create your own. You know what? It's just Excel. You can create your own. But here's my trade portfolio. And up in here, you can see that what I've done is I've come in and I've created these little spreadsheets that tell us all the things that we trade here in our class, right? So we got YouTube morning class, we got YouTube power hour class. That's what we're trading today. YouTube stocks class, options stocks, options futures, options off hours futures. Oh, screwed that up. Here, undo. Off hours futures, and then all of our win loss balances, daily gains, percent gains, whether we met our goal, daily loss, our little calendar in here. So we come and put all of our information in here. Then once we make money at the end of the month, right, we have some money down here, or throughout the month, we can take the money out and we go and put it over here in our cash cow long-term investment portfolio, and we take the profits that we make from making money and we come over here and we invest it and make even more money. So we're making money on our making money. That's pretty cool, right? All right. So that's how we do it. Now, if you don't want to trade for money, which most of you, since you're here, that's probably what you want to do. I would assume since you're here, you want to trade for making money. You don't have to trade for making money. You can go work at a gas station, or you can go drill teeth, or you can go fix broken arms. Whatever you want to do for money, that's fine with me. I don't care. You can take that money and you can put it in here, and you can go and put it into these investment portfolios as well, and you can make money that way. But I like to trade for money, so I don't go out and fix broken arms, and I don't drill teeth. I just trade for money. That's what I do. So that's what we're going to do here. Going to trade for a little bit of money. We're going to put the money in here, select it, create it, add it up at the end of the month, put it over here in our portfolio, and invest it for longer term investments. All right, there we go. That's how we do it. And so what we're doing here is, again, we're looking at the indexes up here, and let me try and make this a little bigger for you. And we're going to see if we can't figure out a way to make a couple of bucks that we can then invest in our longer term portfolio. The markets aren't really moving a whole lot right now. Let's go over and look at the news. I like to use this little tool right here. It's called Economic Calendar, or tradingeconomics.com. It's our economic calendar. And let's come in here and just look at twos. And 8 o'clock this morning, we had the JOLTS job openings. Forecast was 7.8 million, and it actually came in at 7.6 million. So if that's the job openings, there's less job openings. Well, that's good. More people are employed. Factory orders month over month at 8 o'clock this morning came in -7, -9 factory orders. So it went down. We got less factory orders. It was consensus was going to be 0.7, actually came in at 0.9. That's not good news. Fed Bostic spoke today at 9, 12 o'clock this afternoon. Fed Daily spoke. 2:30, this API crude oil came in. That's not yet. That's not for another hour and a half. So we don't really have anything going on right now. Things are a little bit quiet. We did have a big flush in the market yesterday. If we go out and look at let's just go to the S&P and pull up a daily chart just to see what happened yesterday. All right, we've had a big flush in the market yesterday, and we all know the reason that happened. This is the daily chart. The reason that happened, that big flush right there, was because Donald Trump put tariffs on Mexico and Canada, right? And that flushed the market. But then within hours, those guys called on the phone. Donald, we can't have this. And so he's like, all right, what do you want to do about it? Well, how about we put thousands of troops on our southern border to keep them out of U.S. He says, that's a good idea. Wish I'd have thought of that. And so then he solved that problem. And I think he had a little conversation with Canada too about too many fentanyl drugs coming across our northern and southern borders. So I think he got some of those things solved. He's still talking to China. They, as far as I've heard, hasn't solved that problem for them. But whatever, who cares, right? I'd rather just leave the tariffs on. All right, there we go. Let the country make some money off these guys as they import all their stuff into the United States and take our jobs. Isn't that the name of the game? Try to have a good economy. We're $71 trillion, $41 trillion. How many trillions of dollars are in debt are we? Can't remember. Trillions and trillions of dollars in debt. Maybe we need to do a little something about that. I'm glad to see somebody's at least trying, all right? You know, Elon Musk's in there trying to do something about it. So I'm glad to see that. I would think that would make the stock markets kind of, feel positive and rally. But maybe not so much. I don't know. It's not our job to determine whether all this good news or bad news is going to make the market go up and down. It's our job to determine where the setups and triggers are, and that's why we use technical analysis to help us decide when markets are breaking higher and lower. It's easier for us to do that than it is to sit and listen to the news. Now, we can certainly listen to the news and take it into consideration, but for the most part, most of the time, by the time we hear the news, it's too late. The market's already flushed, and we're like, why is the market flushing? We look at the news. Oh, tariffs. And then it's like, oh, well, we're a little bit late to the party. So generally what we like to do is we like to do what we call technical analysis, and we do mathematical models of the market, and we catch it before it falls. just because it breaks a trend line one way or other, or a mathematical model like one of these little yellow dots or the blue dots you can see in here, where they come to the points of decision making, right? These are called decision points. I call it decision point trading. And when you see these things come together like this, these are opportunities for you to either get in or get out of the market one direction or the other. We can also use individual trend lines, like, draw a trend line like that. And if the market seems to be respecting that trend line and then it breaks that trend line, that's another spot. And if you have it converging in there at the same time as maybe these yellow dots, that ends up being a nice little decision point that you can maybe put an order on. All right. And then if you're right, you make money. If you're wrong, you just get right back out with a tiny little loss, so that the next time you are right, you make more money than you lost on the tiny little loss. The biggest problem most traders have is that they don't ever get out. They get in and then the market starts going against them and they're like, oh, I'm going to sit around and wait for that thing to come back and I'm going to have a $4,000 drawdown just so I can get back to break even, right? Don't do that. If you're wrong, just admit it and get out. That's the name of the game. And then when you're in, let it stay in as long as draw your trend lines. And as long as it stays above the trend line, stay in. Heck, cut your losers short and let your winners run. You ever heard that statement before? It's a real thing that we do. All right. So let's get rid of this daily chart. We don't need that anymore. Come on, pop it out of there. There we go. All right, now we're going to watch these markets and see if there's not an opportunity. These are some short-term charts. This is a 1-minute chart, so that means each one of these price bars represents a 1-minute time frame, open, high, low, close for that 1-minute time frame. If it's red, it means that it closed lower than it opened, and if it's green, it means that it closed higher than it opened. Now I'm going to come in here and turn off one of these indicators that gives the yellows, and we can just see the straight trait switch over from red to green. I'm also using what we call a Heikin-Ashi bar. It's kind of what I call the cheat codes. If you turn that off, woo, charts are ugly. That's what they look like when you don't have the Heikin-Ashi on. Now, these are range bar charts. So you notice that the Dow Jones is a range bar, meaning that it's a range bar 6. So each price bar is exactly the same size, 6 minimum moves. And then the range bar 6 down here on the Russell, same thing. This one here on the NASDAQ, that's a 1-minute chart. So it has time involved, whereas the range bar charts, they don't have any time involved. They're just movement in the market, just a trend. But man, those are ugly charts. So we better turn on that Heikin-Ashi. Those are called the cheat codes. It kind of helps smooth things out a little bit. I kind of like that. So I'm going to come in here and wait and see if there's not an opportunity for the market to move somewhere. And you see it broke those little yellow dots. Now, those little yellow dots in here in track and trade, if you come to the little yellow dots, that's the average true range. And you can see I've got them set to 1 and 1 in here right now on the minute charts. And what we're going to do is we're just going to leave them there. You can make it a little tighter if you like, or you can make it a little looser if you like, but kind of 1 and 1 is kind of a good starting point. And so we'll kind of leave those there. And generally what happens is if the market breaks above the average true range, that's a good spot to get into the market, as long as you're in an overall uptrend, right? You want to be in an uptrend in the first place, and then you want to have markets move in waves, right? 2 steps forward, 1 step back. So you get a little break like that, and that gives you an opportunity to get in. But you need the market to have a little bit of oomph or a little bit of strength underneath it to push it and keep it going. If it's not very strong market, it'll cross those little blue lights or those little yellow dots and nothing happens. It just kind of wanders up a little bit and comes right back down, and you get stopped out with a small loss. And after a while, if the market's not strong enough, you get stopped out with a little small loss enough times. That's called, death by a million small cuts. So you have to be careful. And if you have to realize that, hey, if the market's not moving, we have to sit on our hands for a little while and wait for the market to move a little bit and get a little bit of strength in there. And usually in the last hour of the day, power hour, we get a little bit of strength. So that's why we like to come and watch power hour. But right now, the markets are being a little bit lazy, a little bit tired, 1:15 my time. We're getting a little bit of movement here on the Russell. You can see down here, we got kind of a nice little rally coming up here. Got a little pullback, broke the yellow dots, but didn't break them. I mean, it kind of snapped down through them. It's trying to go higher right here. That's a buy signal right there. First bar to make a new high on that, but it's not a very good buy signal. You can take it if you want to, but it's not a very good buy signal. But we'll stick it in there just because we got to do something, right? This is financial entertainment. We got to see if we can't make a little bit of money. We'll probably just get stopped out, but that's okay. We'll just get stopped out with a very small loss. So what I did is you see that I've got these QOCO orders over here, QCO1, QCO2. These are custom orders. So what they do is when I click that, this is a drag and drop order trading platform. And what it does is it actually drops the orders onto the screen so you can see them visually. There's no little pop-up box that says, hey, you got to fill in quantity, what you're trading, limit order, market order, stop order, and then you got to fill that in. And then, oh, I want a limit order. So then you got to go do it again. And then you got to go do it again for a stop. None of that. All right. This is designed to go very fast because it's designed for day traders. All right. So what we do is we set that up. I'm going to bring this full screen so you can see it. And what it does is we've set these up, and I've got all these little settings in here, and I share all these settings with you. You can have my settings. That's why you're here, right? It's to get the settings that I use. And so these are just buy market orders. You just drop them in there. Very simple, very easy, but it automatically sets an OCO order. So it has a stop order in here. It automatically jumps to that little yellow dot. So if it crosses below the yellow dot, and generally when the yellow dot and the blue dot come together, that's a reversal point. So this is why I said it's not a very good buy point. Because we can come in here and look at the probability statements. And so this is probably what I'm going to call an A1. And this right in here, this is our A2. And this right in here, this is an A3. That means that what we just took is an A4, which is a really low probability of success. How come that's not doing what I want? A4, there we go. And so, that's kind of not a very high probability of success. But nonetheless, we took it because we wanted to, we wanted to give it a try. Don't do that. Let's see. We're going to come in here. And this is the A1 right in here. So we got A1, A2, A3, A4. A4, very low probability. And so we got to just keep that in mind that this is not a very good setup. But we took it anyway. Actually, what's going to happen is probably going to turn and flush and come right back down. And we can measure that with the Fibonacci ruler. And traditionally speaking, this thing will come in here. Technically speaking, I guess it'll break those yellow and blue lights right here and come back down into the Fibonacci sweet spot. So I don't know why I took that position, just because we could on a lousy A4. So we'll probably get stopped out right here on our little stop. Watch that. See that? And then it automatically got rid of the stop order and got rid of the limit order at the same time. So that's a thing that happens. So we're down a little bit, $50, but that's okay. Cut your losers short, let your winners run. And we'll wait for that thing to pull back. Maybe if it pulls back far enough, back down here into the sweet spot, and then we can look for it to turn around and start to go back up again. We get what we call an ABCD pattern. So this would be an ABCD pattern, and we look for it to go up again. And we get little ABC patterns inside of bigger ABC patterns, like right here. That's why that was a little ABC pattern. We get another little ABC pattern, and that's why it's an A2 and an A3. We got another little ABC pattern. That's why we got an A4 in there. Again, A4 is pretty rare. That's pretty lousy probability for our success. But that's what we look for. Now it's kind of wandering around in here. We want to see it pull back a little bit farther. It's going to break those yellow dots. We don't want it to go wander sideways. That would be a nasty thing for it to do. We want it to make a decision. Decision point trading, buddy. We want you to come back down in here. Well, Lan, why don't you take a short position and go short? Well, because this is the counter trend. And counter trends usually aren't all that long. So we just get a little pullback in here. Then we'll anticipate a continuation of the rise. This is just a little profit taking in here. That's generally what happens. But if it does, if it flushes all the way down here, well, then it could be a reversal, and we could look for it just to come up, get a little ABC pattern that way, and then flush back down this way. But we got to get some oomph behind it. We're not getting a lot of oomph in here. So if it did that, we'd have a little ABC pattern coming in like that. All right. So that's what we look for when we trade. Just looking for the probabilities. Are we listening to the news? Not really. Why? Because the news is already going to come out, and on these little small moves, especially like this, the news isn't much help unless you're listening to the news immediately when it comes out. So let's close out some of these things. Let's see if it comes down into that Fibonacci sweet spot, like we said, right between 38.2 and 61.8. If it'll do that, we could take a long position, but we're not going to take a long position until we get a breaking of the trend line, right? Or a natural trend line in there. Get the first candle to break a new high. Look how it came right down and touched that 50% level line right there, just like a train on rails. Let's see if it'll turn around and come down and touch that 61. That 61 is the golden ratio. A lot of times the market likes to come down and touch that. But we're getting a turnaround point here. Look at that. It's going to try and make a first candle to break a new high. If it does, that's a buy signal, but it's an early buy signal. Do you want to take it right now, or you want to wait for it to cross that yellow line and continue higher? This could just come right up here, make a little tiny ABC like this, and then turn and come back down, hit that 61.8. So oftentimes that first candle to break a new high, we won't take that right there, just in case it wants to turn and come back down. If it doesn't and just goes to the moon, well, then you're like, well, damn, I missed that one. But what we're going to do is wait and see if it won't give us a little bit of a pullback, and then we'll take the next one. All right. And if it breaks above that little peak right there, that's another little buy signal that we can look at and take that. Like, Lan, how do you know all this stuff? Well, I'm an expert, whatever that means. All right. What I do is I write all this stuff down in a slide deck like this. And if you come in here and take a look, I got all this stuff written down for you right here. And guess what? You can go get it. It's all in my book. Your book? Of course you have a book. Obviously I have a book. I'm a school teacher. What do you think? I just don't pull this stuff out of my piney hindy. No, of course I have a book. All right. Where's my book? You can go get the book, if I can find it in here. All right, there's the book. All right, go get the book, Stock Market Playbook of Strategies, out on Amazon. You can scan that little code right there, or you can just go to Amazon and search Lan H. Turner. Make sure you put the H in there. You'll get lots of pictures of Lana Turner. And I know she's pretty, but she ain't going to help you trade. So go in there and search Lan H. Turner, and that book will come up. Don't get the used one. Don't get the old one. You just might not get the current, latest, and greatest version. It's 238 pages, full color, 8.5 by 11. It's a great little manual to the class. Go get it. It's got all this stuff in here. It's got all the probabilities. It's got all the patterns. It's got everything you need. Go and get that back. Oh, look at that drop. We got our little ABC coming back down to the downside. Delete all these. Let's get rid of that. Look at that market. It's coming all the way down to 78.6 right now. Look at that. Touching it right there. It blew past 61.8 just like it wasn't even there. Well, it touched it right there, didn't it? That bar come down and then pulled back, and then it flushed again, and now it's hitting 78.6. Now, a lot of people will buy right there. They'll put an order in there to buy right at that 78.6 because that's a big pullback in anticipation of saying, hey, that market's going to hit that support level and go back up. We could do that if we wanted to. We can come in here and just grab one just like that. We're a little bit late to the party. We're all the way back up here at 50%. We'd leave our limit order down here. If it comes back down, we'll grab another one. All right. Now we're looking for this market to turn and rally because we're long the market. We want it to go back up from here. We should have got in here, but we were overlooking it. Advertisements for my book. That's all right. Let's see if it'll come down. This might be a 3-drive pattern to the downtrend. Drive 1, drive 2. We might get a third drive down in here. We'll pick up a second contract right here. Come on, buddy. What are you going to do? Make a decision. Make a decision. The one thing I hate is indecisive markets. Markets that can't make a decision. They just wander up and down all over the place, and they can't make any trends. They can't make any decisions. Don't trade those kinds of markets. But we only have 1 hour to trade together, so we have to trade even if the market's not doing anything. Just realize that we're doing our best we can in a lousy market. Oftentimes, what we've been having, the experience we've been having the last few days when we've been trading is the last 10 minutes of the day is the only time the market moves. So it was dead all day until the last 10 minutes. Then it rocketed around like crazy. What you gonna do, market? What you gonna do? We got that order down there, 78.6, sitting there waiting to the dollar cost average down. I'll take that $1 cost average, but that's it, down that far. I don't want to take any more than that. If it's going to come and break all those lows. And you notice I'm just inside 78.6. It knows where that 78.6 is. It knows. There's calculators out there on these markets, and they know where that 78.6 number is. Trust me, they know. Now, a lot of the small speculators, the little small speculators like retail guys, they don't know. They have no idea. But the big boys who trade with mathematical models, they know where that 78.6 is. And if they're active, they might come in and push the markets around and go to these different locations. And their mathematical models oftentimes are just bots. They're just computer systems. And they know. Trust me, those computer systems know. They've been programmed in to take it, have attention. But they got to fight always. They always have to fight with the little retail guys who don't know what the hell they're doing. So that's why markets are kind of weird sometimes. I think you'd actually have better success if you just traded against the computer systems, because once you figure out where they're at and what they're doing, they're a lot easier to deal with than they are all the humans who have emotions involved. Who wants emotions? We hate emotions. Let's come say hi to a few people while we wait for this market to do something. It's got to either shit or get off the pot. And right now, it's just sitting there watching YouTube videos on the toilet. That's what it's doing now. All right. Nobody ever does that. Come in here, John C. How you doing, John? It's good to see you. Kirk, nice to have you guys out there. John's coming in with the gold. First one to say it. Nice to see you getting the gold, John. The Olympics are over, but that's all right. We can still hand out gold and silver medals. There's Kirk coming in with the silver medal and Bruce coming in with the bronze. How you doing, Bruce? It's good to see you in class. Missed you a couple of days. Paul Goddown. Well, I like that name. Paul, it's nice to see you. Frosty, it's good to see you out there. MB, Mr. MB, Jay, it's nice to see you, Jay. Great to have you. Lowdown Killer, it's nice to see you. Lowdown Killer and I have been communicating via email. It's nice to talk to you guys a little bit. Glad to have you guys here. Look at this lousy market. Look, Lowdown Killer, this dumb thing won't even move. It's just sitting there dead. Let's go see what the other markets are doing, shall we? While we wait for that one. Oh, we got a little pop back up. It would have been nice if we'd have got that 78.6 order filled and then take off. But look at all these markets pulled back. Looks like the Dow, should we stick one in there on the Dow in anticipation of a rise in price? We got a nice little trend line down here, just like that. Look at that. It's trying to cross that natural trend line right now. Now, that'd be an early because the yellow dot hasn't flipped. Come on, flip, you little booger. Flip and we'll go in with you. No, you ain't going to flip. Come on, that's a range 6. We should get a flip right here. Come on. Flip, 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 flip. Flip to the other side, yellow dot on the Dow. We're looking for the dot to flip for us. We're trying to go long down there on the Russell. No, it ain't going to flip on the Dow. Dow's lazy. Let's draw our counter trend line in there. That's the counter trend. Look at that. It's going to try and break that trend line. It's respecting it pretty good, pretty well. We're not getting anything out of this Russell. Come on, Russell. I have no patience. That's why I have to be a day trader, because I have no patience. And these are about as fast. Slow markets today. Come on. Look at this flush down there on the Russell again. Oh, and we're flushing on the Dow. Got a little counter trend here on the NASDAQ, right, or on the S&P right there. Look at that little pennant formation. Look at that. Same thing down here on the NASDAQ. We got that. That's not good for our. Come on, Russell. You can keep it up. The Russell, maybe Russell can keep it up a little bit longer. We got our long position on Russell. Everything else is flushing. That's not good for our Russell position. Although it's going up while everything else is going down. Come on, Russell. Keep it up there. Keep it up there. I'm still looking for this Dow to break this natural trend line. Problem is, it's not respecting it. It's not respecting it. Russell's trying to make us a little bit of money. We can come in here and add an OCO on this baby, just like this. Let's bring it full screen. And we could say, I just want my money back on this one, $50. If it'll touch that, we'll just take that one back off. Let's see how this does here. It doesn't look like it's going to go anywhere. Looks like it's just wandering in the woods. That one looks like it wants to keep going down. This thing, look, it respected that nice little trend line there, and then that made that little triangle formation. It popped out the bottom, faked on that one, came back into the triangle like it often does, tried to go down again. Now it's coming back around, breaking the yellow dots, breaking the blue lines. Here we go. Let's get her in there. Get her in there. Come on, let's make her happen. If it'll show a little positive strength in here, we could put another one in. But right now, this market's just being stupidly sideways. Come on. You see that guy on, who's that guy on TikTok? He's like, come on, get her done. Like and subscribe. He's got kind of a rough voice. You ever see that guy? Come on. Come on. Come on. Try another one on the Dow, see if that thing's not going to go. Change that over to the blue light, just in case. Just in case. Just in case the market rockets off like a rocket ship. Look at that Russell. Come on, Russell. Man alive. If you guys weren't here watching, I was trading this market, and this is how dead it was, I'd just turn it off and walk away. I'd just turn it off, walk away. This ain't worth trading. This market ain't worth trading. I just turn it off and walk away. But we can't do that. Don't learn anything by walking away. Come on, you rotten thing. Sometimes the best thing to do is to learn what not to do. And we're doing that today. Don't trade this market. That's what you shouldn't do. This market sucks. Maybe 20 minutes it'll be good. Maybe we'll get something out of it. Now we're down $160. Come on. Now it's going to go. Watch this stupid piece of crap. Try again. We got 3 of them in here. We're going to try and take one off just right there. Scalp a quick $36. Doesn't almost seem like it's worth it, but we'll do it. Come on, Mr. Dow. Dow 30. This is the Dow 30. Hey, we got a little bit. We took something off on the. We hit our limit order down there. Got ourselves back to break even for the loser that we had on there, but we're breaking the blue lights now on the Russell. If it'll pull back, we got to clean up our mess here. Let's get rid of that one. All right. We're going to scalp another one out here on the Dow here. If it'll pop up there and test that high, I bet we don't want to break it. Let's just try that right there. There we go. We took one off on the Dow, so we took a little bit more off. Now let's see if it won't push higher. Come on, Mr. Dow. Yeah, we should have stayed in on that Russell. It's starting to move higher. Bounce through that Fibonacci sweet spot forever. Now it finally broke, starting to try and go. Notice that my yellow order or dot, those orders just automatically trail up, follow on that yellow dot. There we go. There we go. There you go. That's what we like to see. That's what we like to see. We can come in here and we can castle this baby if you want to. What's a castle? Well, I put a stop order to get in right there where we'd get out of the same exact spot. Just before we get out, we get in. So it'd take one off, but it'd also add one in. It's called castling. It's kind of a term we take from playing chess, right? But you need kind of an explosive market to castle. You don't want to castle if you're not going to have a nice explosive market. Look, it's dying on us. It's going to come back. 1, 2, 3, 4 green bars. That's really common. 4 green bars, and then the market comes back. We could take one of these and pull it back a little bit, just in case. We want to take a little bit of a risk and put it on the blue light. And it's trailing a little bit further back. Won't get stopped out, only to have the market move in our favor again. Hate it when that happens. So we'll put one trailing on the blue light, one trailing on the yellow light. The yellow light's more likely to get stopped out on just a minor pullback because it scoots in a little tight. Let's bring this up. Oh, look at that Russell. Russell's finally pulling through for us. Let's delete some of those drawing tools. Russell making it move, making its move. Oh, look. Oh, look at this. We're getting a move on the NASDAQ. Let's pop a couple in there on the NASDAQ. That's a little tight there, NASDAQ. Here, let's slide that back down. We're going to slide that down, put it on the yellow dot. Trail on the ATR. Maybe we could pop a couple more in there on that one. It looks like it wants to go with the rest of the market. Boom, 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 boom. Come on, don't back off now. Okay, we got 3 on that one. We're trying to castle over here on the Dow. Would you stop that? Oh, look at that. Wow. Look at old cousin Russell down there. He got some energy behind him. Let's see if the other markets will do something. Come on, Dow Jones, Mr. Dow. I don't know if I really want to castle right there. This thing's starting to show some weakness. Okay, we just castled and we took our profits. All right. So now we're long 2. We got to put another order in there. Let's come in here and we'll just put a stop on here. Oh, which one are we active on? Not that one, this one. And let's put a stop on edit, and we're going to put that on trail on the blue lights. Yeah. Give it a little bit more room to grow. Okay. See what I did there when I castled? I took one off and immediately put one right back on at the same price. So I just took some profits and got back in. It dollar cost averaged my position up just a little bit, but I added the one on first before I took one off. If you take one off and then add one on, dollar cost average goes boom, really high. But if you put one on first because you got 2, it only dollar cost average 33%, and then you take one off, it doesn't jump your average price up so high. It's just a little trick you can do. Come on, baby. If you start getting nervous and you're like, you know what? I think it's going to flush right here. You can come in with your stop order. And we got one trailing down here. And you can just push it right up there. And you can say, hey, I'm going to push it right up there. Oh, just one of you, not both of you. And you're going to slide one of them up there just like this. Watch this. Let's bring this screen bigger so we can see it. So you can push this up in here behind the market like that. And you can say, if it flushes, I'm going to get out. But if it wants to go, I'm going to let it go. If it keeps going, I'm just going to keep sliding that up there a little bit tighter. This one here used to trail on the ATR. I accidentally turned it off. I'll turn it back on. Okay, now I'm just clear down here with my entry. But this one, I'm starting to say, oh, if you want to keep going, you keep going. But if you want to keep, it's getting a little extended. If it pops back down, I'll just take it off. See that? That's going to take one of my profits off. There, took my profit off. So now I'm just going to let this one roll. Where's our limit? We don't have one. We just took it off. All right. So the only thing we got now is just blue sky above, and we're going to trail on the yellow dot until the yellow dot crosses the market. And it could just flush back down and hit our order. Could do that. Now look at the blue light. It's catching up. We're only long one again at this point. You could just take your profits off right here and say up $144. I don't think it's going to go any higher. If you don't think it's going to go any higher, you could be a little bit more aggressive. You could say just trail price bars back, and you could just say I'm going to go 1.1 price bars back. There. Now if it breaks, that's just enough to cover the spread. Now if it breaks down, higher highs and higher lows, right? As long as it's making higher lows, we'll keep going with it. But if it makes a lower high, we'll just get out. Boom, we're out. It's no longer making higher lows. So now let's go over and see where the other are. We got another position going over here. Oh, we forgot all about our NASDAQ. That was all set on autopilot though, so we is okay. All right, we got 3 trailing stops on the yellow dot, and we got 3 limit orders out there to take profits. We had almost touched that limit order. Came really close. Now this is the micro, so it's smaller. It's 10 times smaller than the mini. That's why we're up with 3 contracts this far. If we were in the mini, that'd be $860. But since we're on the micro, it's $86. You can trade with a little more confidence over here on the NASDAQ if you're just a new trader. That way you're not, risking the farm if you're wrong. But you can still make good money. I mean, if you took it off right now, you'd be up $100. $100 in 30 minutes, 35 minutes, that's pretty good wages. Not a lot of guys make $100 an hour. And that's on the micro. This is a tiny one. How much money would I have to put in, man? $100 per contract in the micro. So you'd have to have, this would be a $300 investment right here. And you can trade to your heart's content. You can open your account with $2,000 over here in the futures market. Trade the micro NASDAQ. That's all you have to do. Just trade the micro NASDAQ. It's the only one you have to do. Just sit here and trade the micro NASDAQ with a $500 with a $3,000, $2,000, $3,000 portfolio. Just be careful and just trade it like this. You make $100 an hour. That's not bad wages. Better than working at a gas station. We're up 322 right now. This thing's trying to pop up here with a little bit more. We could get a little bit nervous here if you wanted to and say, I'm just going to put one of these orders on a trail price bars back. And we're just going to go 1.1, 1 price bar and 1 minimum move. That's just to accommodate this. Oh, we missed it. See, it's already flushing back. Exit out. Take your ball. That's $35. We could have been a little bit. See, it may turn around and go up, and we could have just stayed on that yellow dot and then go to the moon. But I got out. I took my $35. If you want to get in, though, you just do the same thing to the downside. You just come in here and you say, oh, I got a stop order. I'm going to trail on the ATR. This is price bars back. We'll just do that. And then that'll trail price bars back. That's just a quick scalp right there. We don't want to scalp off of this market. It's too small. But we could come in here with a stop order and just say, I'm going to trail down, edit, trail, price bars back, 1.1, and then it'll just trail down 1 price bar back. Of course, this one here is the highest bar, so if it breaks a new high, it'll get us back in. But if it'll go down and give us a new bar to the downside, then there you go, see that? It'll just trail 1 price bar back. Let's make this a little bigger so you guys can see a little better. And then that's for an entry. So now if it'll break, and remember, definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. You can do that on a trend, bigger, taking into account consideration more bars, or you can do it on a small trend like this and each individual bars. And it works well because we got Heikin-Ashi turned on. If you didn't have Heikin-Ashi turned on, it's a little harder. But this with Heikin-Ashi on, because it's got a smoothing component in it, it works well to just follow 1 price bar back. And then when it makes the first candle to make a new high, well, that's now higher highs and higher lows instead of lower highs and lower lows. Come on, NASDAQ. Oh, there's our 15-minute bell. 15 minutes till the Plan, why don't you take a short position here? Well, because I'm looking for the market to continue up. I'm looking for it to make us a little ABC pattern like that. Pull back. This is just a counter trend in here. Might be, who knows? Nobody knows. It could flush all the way down here and I'd feel bad, right? Little FOMO going if that happened, like we did before. But right now, we're just kind of waiting for it to turn and rally. Oh, that's only a one contract, and we're on a micro. So it's going to be a little tiny move, but we'll see. We'll see. We can always add more on if it looks like it wants to get a little oomph in there. Come on, little oomph. Can you find an active trade randomly? Jeremy Draper. I'm not exactly sure what you mean by that. Can you find an active trade randomly? I guess you can just randomly throw money in there and see if it goes one way or the other. Usually kind of like to be a little bit more strategic about it than that, but sometimes we'll do something similar to that, Jeremy, where we can trade both directions. You know, I've got a strategy called the reversal strategy in here somewhere. Where's it at? And we trade that once in a while. I've had good luck with it, but you got to do it. You got to kind of have a more active market. Reversal, it's right there. See that? Stop, reversal, trail entry, one price bar back, 20 ATR. So that little strategy right there is a reversal strategy. And what you do is you drop one above and you drop one below, and you don't care which direction the market goes as long as it goes. But as soon as it crashes one, you drop the other side, opposing order, and it's got two positions on it. So then if it goes up and trails, it reverses. And so it continually reverses your position one way or the other. It does reversals, right? So as long as it's reversing back and forth, but if the problem is if the market goes sideways and you keep reversing, and you keep putting on more and more orders, so it keeps going long 2, long 3, long 4, long 5. Before long, you kind of get your hiney handed to you if the market doesn't move. It works really well if the market's got a little bit more action to it. But right now, the market's being a little quiet down here. Look at the volume down there. It ain't got nothing going, man. It's what does Kirk call that? Kirk calls that low volume move. Low volume move. That just means that the retail traders are the only ones trading. We ain't got no pros in here. No big movers. No big deep pockets playing right now. Maybe we'll get some. We're coming up on the 10-minute bell, 47, 48, 950. We got about 2.5 minutes for the for the 10-minute bell. The 10-minute bell, the market goes up. Usually it depends on how many quant traders are trading. I think that's when they shut their quants off. But it goes bam, 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 jumps all over the place. And it seems like, the last few days that we've been trading, the last 10 minutes after the quants turn all of their systems off, if there are any, then the market starts to trend. And I wonder sometimes whether maybe they're turning their systems on for the last 10 minutes rather than off. I don't know. All right. First candle to break a new high. That's it. So that's our entry because we were trailing one candle back, right? So we trailed all the way down. Now we got a first candle to break a new high. So we'd put if you want to do a reversal, you do two. Come in here, stop, and we're going to do the exact same thing on this side. And then that would do that reversal thing, Jeremy. So we go price bars back 1.1, quantity 2, hit OK. Now it would reverse our position, right? Because we'd sell 2 on our long position. So if it doesn't go up, it's going to stop us out. And we're only trailing one price bar back, which on this market can be, well, this is a micro, so it's not very much. But if it were a mini, it would be, can be a sizable size. But that's why we use range bars oftentimes, because the 1 minute chart can get really big and that can be a lot of money. So if you use range bar charts, it's going to break all those great big long bars down into little or smaller bars. And so these auto trailing stops can move a little bit more accurately. So this is basically a little quant system that we're running right here. It's a computerized system, right? So now it's reversing. So now we're short one again because it tried to break higher and failed. So now it's going down. So we'd come in here and we do the same thing. We're going to go 2. You could increase it because your probability of it going up now, you could say, well, it's higher, right? So now you're going to come in here and you're going to trail that one price bar back. And we're going to trail price bars back, hit OK. Now we're going to see, you just catch it one way or the other. As long as the market moves, it's cool, right? Now we're in the micro and we're only with one contract, but so we're up $15. But heck, you know what? A lot of people will work an entire hour to make $15. That's 30,000 a year if you're working $15 an hour. That's McDonald wages, man. You could come and do this instead of cook hamburgers. I don't know. Look at the failure on this thing. See, this is why if you sit here and do the reversal, you can get your hiney handed to you because it can just go back and forth and back and forth and back and forth. It's got to you got to have a momentous market. That was our 10-minute bell, wasn't it? Was that our 10-minute bell? It was. That's that little flush right there. I didn't see it really jump too much. It just kind of popped down a little bit. Usually we get a little bit more. That's that low volume move, Kirk calls it. Come on. Trading the micro mini with a single contract. Okay, we broke the first candle to break a new high. And I'm going to come in here with quantity 2. We're going to drop our order in here. And you can program this in so you don't have to do it manually like I'm doing here with this little box in here, trail price bars back. But for now, we'll just drop it in like that. Okay, there it goes. If it'll break and go higher. So we got a nice little ABC package happening here. I don't know if I can get to that. It's underneath it. We'll grab this and put that there. Put this back where it was. Put this little drawing tool here. And like we got this little ABC pattern. And see, that's that little ABC. If it breaks above the previous high, we got a line right here. Woo! There it goes. So that's that reversal thing you asked about, Jeremy. That seems to work pretty good if the market's moving. It's just kind of can rip your wheels off if it doesn't. Just go sideways. It just goes bam, 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 and you get destroyed with a million little cuts. You can do it with the yellow dots too. You don't have to do it on every individual bar. You can say, well, every time it goes long, I'm gonna trade the long breakouts on the yellow bar, and then I'm gonna reverse it on the yellow bar going the other way. So you could sit there and do a reversal on the yellow bars, and then you could program that into your little OCO buttons, and just all you have to do is just pop the button, and it automatically puts it in there, runs it like a quant system, but you're the one making the decision. So now we're going long. Again, if we were trading the full size account, we'd be up $130 right now. But since we're on the micro mini, we're not taking big risks. So you can come and trade just singles like this. If you're just a new trader and you're a little bit worried about how much money, you don't want to lose a whole bunch of money. Maybe you're a little nervous, you're not real good at it. Trade on these little tiny micros. And then, you can still make good money. I mean, make $100 a day, make $100 in an hour. That's not bad money on the micros. If you can catch a good market, trade it right, get in on good entry, $100 is pretty good money. Not that $10,000 every 10 minutes that guy on the other channel does, but not everybody wants to trade like that. Sometimes, want the little micro minis. They're a little happier trading little smaller numbers. Maybe they got a wife or something, and she doesn't want you trading great big $10,000 risks. There it goes. Look at that. We'd be up $500 right now if that was on the mini, but we're on the micro mini, so it's up $50. That's not bad money. A lot of guys will work for an entire hour for $50 an hour. Engineers. There's a lot of engineers don't make $50 an hour. You take it off right there, $50. That's for a single contract. That just won. There it goes. Now we're up 65. Take it off. You made $65 in 10 minutes. That's not a bad trade. If we were on the full size, that'd be $600. But of course, you got to realize that, on the other side, you're risking, $150, $200 every time you jump in the market. Your wife might not appreciate you taking those kinds of risks, but just don't tell her. Just don't tell her. Just trade the micro mini at first. It's okay. There's nothing wrong with that. Trade a single contract on the micro mini. Nothing wrong with that. Don't feel embarrassed. Market does have to move to cover your commissions and fees. So there's no commissions and fees in the demo account. And the reason they do that is because they don't know what your commissions and fees are going to be. Most everybody starts out at the same commissions and fees, but if you trade a lot, they'll give you better commissions and fees. It's a negotiable number. You call them and, well, your fees are always the same, but you can get your commission a little bit different. Problem is, commissions are getting so low right now. There's not a lot of room to move on that. Yeah, well, my commissions are so high. Actually, your commissions aren't. It's the damn fees that the government posts on everything and takes all of your money. That's where you're paying all your money. It's not the commissions. It's the fees. Fees are at this point oftentimes more money than the commissions. See how that thing moved up? One price bar, just trailing up. One price bar back, all by itself. You don't have to do anything. You just set up your own little quant system and away it goes. You watch it on the screen. It's a visual representation of what's happening. Now, we didn't attach those two together. This is sell two. This is a reversal. If you want to reverse, I don't know if you want to reverse at this point. So we could just change the quantity on that. And that would just take us out. Yes, you can change the quantity just like that in the futures market. In the stock market, they make you close the whole position out to change your quantity. They don't let you just go to the ticket and change your quantity. But hey, we're in the last bastion of true capitalism on earth today. Just change your quantity right there on the ticket. Come on, baby, rock and roll. It'll break another one. That's another buy signal right there. You could add on right there if you wanted. You thought that market had enough oomph to go, but look at the volume. Volume's decreasing, so I'm not real thrilled to go in there and put one on a break here. This would be your A1, right? So technically speaking, and that's what we're doing here, technically A1. So this would be your A2 in here. So that's a buy signal if it'll break above that previous high right in there, which it did, but it's just not very strong. This is your A1 right here. We got in on the early A1. So this is A2 trying to go higher. And it died. A2 fail. Hasn't completely failed because it's got to hit the blue light to actually fail. You know, we just got stopped out on a little micro aggression here. We can put it back in. And we'll just come in here and we'll drop this back in here and we'll say same thing. We'll just say edit trail. We're going to trail that on price bars back. We'll just let it go and see if it wants to go one more time. We got stopped out, but this is with quantity too, so start over. This is an A2 entry. See if that A2 will go. It's a little pullback on this first drive. We'll look for three drives, A1, A2, and A3. So come on, A2. Don't fail on me now. Let's put this limit order up a little higher, up there at that 161.8. That's just inside of that 21,700. That's a good place for it. Come on, baby, rock and roll. There we go. That's testing that previous high. It's got to break that previous high. You can take your profits right there at the previous high. That'd be $42 if you took it off right there. That's not a bad little trade. I know a lot of guys will work a whole hour for $42. And it's coming back down. We didn't take it. We thought we were going to go for more, and now it's flushing us. Yeah, we get stopped out of the loss now. Well, that sucks. Yeah, we got stopped out. That market died on us. So that A2 failed. Well, it hasn't completely failed. It's just going sideways. I'm going to call it a fail. Yeah, that A2 failed. A2 fail, market closed. That was it, guys. I didn't realize we're that close to the close. We should have just taken it off when it tested that previous high. That would have been a nice little trade, but instead we got stopped out. So $348. $348. I know a lot of guys that won't work a whole day for $348. I can't complain about that, right? All right, $348. Oh, this is January. We're trading in February. I got to take this whole sheet, move it all over to February. Control copy. We need a new sheet. Control V. This is going to be new, rename. This is February 2025. Trade portfolio. This one here, rename. This is January 2025. I'm using spaces lane. All right, so let's come in here. We don't need that. Boom, just like that. Here we go. All right. So we ended up with, what was our total? Equals. Let's see, we don't want equals. Let's, don't do that. We're going to come in here and we're going to go sum, auto sum. There we go. 2,800. And so we got to come over here. Challenge, we start at 130, January starting balance. Now we got to go February. February starting balance. And this number equals this number right here. Boom, just like that. All right, we're starting with $2,800. Oh, well, we got to add that, don't we? So we got to go plus this. All right, 133,779. Dun, dun, dun. Daily max loss. Max, we can lose $1,000. 2,000 on this one. How much we got on this one? We got to clear all these out. I'll go through and do all that. But all right, so I'll reset all our calendars in here. This is going to be a new February calendar, February 2025. And I got to clean all these numbers out for our February. But there's January. And I think we actually took some of this money out and spent it already. So we already came over to our cash cow portfolio and put some of this money in over here. Can't remember how much we took. Can't remember. But did we get a dividend payment on our cash portfolio that we need to enter in here? So I got to remember on February 4th, which is today, I'm going to make a note here. February 4th, day trading power hour. We made how much? $348. So I will create this spreadsheet, spend the time offline so you don't guys have to watch me, clear out all this stuff and start over and reset my calendars. And then I'll put that $348 over on here on YouTube Power Hour, February 4th at 3:48. So then we'll have a record of that. That'll be nice. But I do want to come and see if we made any money, if we got any money for our dividends. Let's go see real quick here. Let's see, how do we find this? Here we go. All right, we're going to come in here and we've got YMAG. So let's go look at YMAG. Is that YMAG? Oh, that's NVIDIA. YMAG. Let's look and see just for fun. Did we make any? This one here is 19 cents on January 30th. 19 cents on January 30th on YMAG. If we come to YMAG, January, oh, we do have one we can enter. 130-2025. And we made 19 cents. How many shares do we have on YMAG? We have $2,630. 2,000. We got to do a little math here. $2,630.19 or 19 shares holding 0.19 times. Can't remember. Was it how much was the pennies? 19 pennies. 0.19. equals. That's $499. Baby. $499.73 on dividends. Bam, just like that. Okay, so that brings that number up there. Did we make any on Tesla? No, Tesla didn't give us any money. 124 was the last one. Next one's not going to be till 224. So what about this one here? Misty. Let's check and see if Misty gave us any money. MSTY. MSTY. Nope. The last one was January 16th. Oh, wait a second. What a second. Why January 24th? Why do we have January 24th? We didn't get it. Oh, 16. I think that's just the date I put in this one here. $2.28. I think that's what that is right there. Let's go look and see. $2.28. $1,936 or 0.3 times. Bad memory. 228, 2.28 equals. Yep, that's what that is. Oh no, that's the wrong number. Well, that's the only time 124. 124, December 19th. We got screwed up in here somehow. I got something wrong with my calendar because we put this order in. This is borrowed money from Grandma's brown paper bag. We need to pay her back, but she's not charging us interest, so that's good. Nice, Grandma. We later invested another $6,300 from options trading. Oh, so we had 5,000. There's our 631. That's what we took out. That was from our options trading. That's the January money we took out. The thing is we put this on 1/1, and on 1/24, we say that we earned some money. Oh, that's why this is Tesla. That's why. Misty is the one. Misty. Reinvested dividends. I've redone my calculator. This is kind of out of whack. So there's our 117. I keep looking at Tesla. This is 117. That's not right. It's January 16th, 117. Oh, and this one came in at 119. So that's okay. Do we have January 16 in here? We don't. Oh, we do. That's this one. Dividend. 1/1. We got 50,000. That was our reinvested. That was our seed money. We should count this as seed money. This is our dividend. So we got our dividend on 117 on Misty. That's that one. Daggone it. So $3,900. $3,900. So there's no more. We won't get any more until the 17th of February, I would assume. And how much will it be? Should we do a quick calculation to see how much it's going to be? If we do the same thing, if we get the same dividend, those change on these markets. So we got how many shares? 1,936.53 shares. And we're going to go times, well, we did this, 227. This is Misty, $2, 2.27 equals. We're going to get $4,395 on February 17th. We'll get paid $4,395 for our $56,000 investment in Misty. That's why we day trade to get money to put in here so that we can get dividends. All right, guys, that's it. That's what I got for you today. The best thing I can do for you is give you a little Sunday school lesson before we take off. If the market does not decisively move in your favor, get out. That's the biggest mistake most traders make. Oh, I was wrong, so I'll stay in. Wait a second. Where's the logic in that? I was wrong, so I'll stay in. Now, if you're going to do a little dollar cost averaging because you're, doing what we did, we got in, we had a spot where we said, well, if it comes back down to here, we'll add a second one on because we didn't have a big risk on, right? But generally, if you get in and it doesn't just immediately go in your favor, it's just better just to get right back out. If you're wrong, admit it and get out. All right. If you get stopped out, it's probably not a trade you want to be in anyway. All right. So if you get in and it doesn't just take off and go in your favor, probably not a trade you want to be in anyway. Once you've moved stops to break even, relax, scale some positions out, build your reserve, then let the system mathematics work their magic. Take profits along the way, pay yourself a job well done. All right. Cut your losers short, let your winners run. That's my Sunday school lesson for today. All right. If you guys have any questions, please like, share, subscribe, do all that YouTube stuff. It always helps us, and we like that. Let's see. We got to come in here. You are looking at the Tesla. You realized that I was making that mistake too. I realized it after the fact. John, I think you have a wrong dividend price. Yeah, I was looking at the wrong one. And then John C. Misty was 308. So I figured it out after the fact. I was looking at the wrong one. I was looking at Tesla. I got to readjust these because I readjusted them in my real money one. And what I did is I took the spreadsheet and I put them one on top of the other. I didn't have the seed money listed. Now I did here on Misty, I've added seed money and the dividends and they're right. So what I did, I stacked them and I said, okay, dividends are on top, seed money's on the bottom. And then I can keep those separate. And then I don't have to fill in anything up on top. It just automatically puts that in. I just haven't done it to this one. This is our simulator. So I haven't taken the time to fix the simulator. I fixed all my real money accounts, which I've got like 10. So it took me a long time to fix them all. So I need to come in and do this one. And I'll do that. It'll make it easier for us so we're not confused. Because Tesla's here and there's no seed money Tesla. And I need to set that up. And we got Misty, dividends, and seed money, and I need to set that up. I've been putting them on top and bottom. I'll redo that and get that out to you. I got to get this new spreadsheet out because I got some other stuff in here too. I've added to our spreadsheet. Look at this. I got these little trade calculators in here. So this is dividend calculators on normal stocks, and then this is our YMAX yield stocks. And you can compare one to the other and you can see the difference. And I've got all of these ROCs and ROCC numbers and how long the payback is and all that kind of stuff, really cool stuff. And I'm going to take that stuff, those calculations, and put them over here so you can see the difference between traditional dividends and the ROCC dividends that come with YieldMax. And then I also created this other little thing that you can put in here, and you can put in an individual symbol, and then it'll do the calculations to tell you how long it'll take you. You specify how much money I need to live off of it, right? How much money I need, your desired income. And then it'll give you a list to tell you at what point, how long it's going to take you before you can live off of your dividends. If I can spell dividends right. Dividends. There we go. And that's going to be a fun one. I'll give these all to you. So this will all be included in your Pit News Magazine subscription. You'll get all these little calculators I work on. I create all these wonderful little calculators for you guys and just give them to you for free. As long as you're a Pit News subscriber. Look at this. This is a cash cow portfolio, another cash cow portfolio. This is the model. And did I fix the model? Oh, I did. Look at the model. I fixed it. So in the model, you got YMAG dividends and then YMAG seed. And then you got YMAX dividends, YMAX seed. NVIDIA dividends, NVIDIA seed. So this whole model has been recreated for you. So this is the one you want to copy and paste. This is our cash cow portfolio that I haven't switched yet. So I need to come and do this one because this is the active one that we're actually using in class. All right. Tomorrow night, class at the university. So if you guys are local yokels here in St. George, Utah Tech University, come and join us. Room 204 in the Udvar Hazy building. And you can come and learn a little bit about reinvesting your dividends. That's what we're going to talk about Wednesday night. And if you have any questions, please let me know, guys. I guess I haven't got anything else for you. And we will catch you tomorrow morning. And we'll start looking at trying to make some money trading so we have some money to put into our universal dividends. All right, take care. We'll see you tomorrow morning, bright and early, 8 o'clock a.m. Mountain Standard Time.